Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, everyone. Ira Epstein of Linn & Associates with your financial market update, and this is for Wednesday, the 5th of April, 2017, about 3:45 p.m. Central Daylight Time. Whoa, what a crazy day. You know, the market went up and stocks were soaring this morning. They had the ADP numbers out, and to say that they were blockbuster numbers, that's not even the right adjective. It was rock and roll. And if you looked at those numbers, that was the headline. You got to go back to February. February was revised downward, so the two combined weren't as blockbuster as the market was taking it. I was scratching my head going, wow, I guess any gain is just going to be a real good gain. And I guess what the market was looking for, and I don't know what they thought they were going to see in the FOMC minutes, but the whole world changed after those minutes came out after 1 o'clock. And if you go back and you run your 15-minute bar charts or the like, you'll see the market started spiraling down. I was called by the Wall Street Journal, I think it was around 1:30, not much later than that, and for an interview on what I thought in gold the impact of the FOMC notes was. And I said, after reading them, I saw a wishy-washy Fed. I see a Fed that like a person on a diet. I want to lose 20 pounds. Okay, when are you going to start your diet? Well, I want to lose 20 pounds. I'm the Fed. I want to cut back my balance sheet. When are you going to start doing it? I want to cut back my balance sheet. That's what I think occurred. I can't prove it, but that's how it read to me. And I said, you know, that might take the steam out of this market, might hurt the dollar a little bit, and maybe it'll kick the gold. That was my interview. So we'll see what happens. In the gold, by the way, you see the last quote, and I want to come back to that. Let me do this right. It's 1257.50. It really finished. The settlement price was at 1230. It was about 1248 in a fraction. All right, so here we are in the Dow. Dow comes down this week, gets a bounce, and for the week now it's down 36 points. Remember, at one point today it was up about 200 points, so it gives you an idea how wild the swings are. Here is a market that seems to have distribution going sideways. That's the best I can say about it. It's still in an up thrust, or is it? You got to be careful. If it starts slipping much more from here, that up thrust is going to disappear and you'll go into a down thrust. You can just almost visually see the fact that you got higher lows. Do you disagree with that? When I put on the swing line, you see those. But without the swing line, you don't realize that from this high, you actually came down and made a lower low and then the higher high. Let me take you there again. The typical person without the swing line is going to look at that low and that. You won't pick up right here's action. We do that, and I teach this in the charting course because it helps you understand, is the market trading or not? Now, I'll talk about the trading course in a moment here. So you had the higher high and lower low. You come back up into the resistance where you were before, and you had a failure today. Now, how big a failure? It's not big unless you get follow-through. Where's the battleground? The 18-day average of closes. I get so tired of saying that because people have to learn what that's all about, but that's what it did. It yesterday finished like this. Hadn't hit that number. Hasn't hit that number since back here, mid-March. Gone now about 2 weeks, 3 weeks. Hits it today and gets thrown back again from it. Now, when a market is under the 18-day average, it is expected that on a rally to it, that's going to be resistance. Point. When the market's over it and it falls back, expected to be support. So the first hit of it, think of it as a wall. It generally does that. Does it have to every time? Nothing in life has to do anything every time. You know, they say everybody's got to pay tax and death. Eventually, you probably won't even die. I don't know. Science is crazy, right? When we look at Bollinger Bands, you've got narrow Bollinger Bands, but the slope of them is down, not up. They peaked out up here, then they started sloping down. That's all that I could say about them. And the market hasn't recently done very much. When it tried to get under the band, it got thrown back into it. You see a real crazy market when we get to the VIX. Here we are again. And what's momentum? You know, if you believe, as I do, that slow stochastics are a momentum oscillator that leads price, that is flat. It's not going anywhere. Seems to be what's going on in the market as well. On the S&P, you came up, had your failure, again hit the 18-day average, got back under it. What's the pattern? You got a higher high but a lower low. I don't see a trend yet. Momentum here, flat, trying to arc down, hasn't done it yet, but trying. On the NASDAQ, you got right up to the upper Bollinger Band. This is yesterday's action. I would teach, and do teach in my course, expect that's where the pros sell out, the upper Bollinger Band, and that the 18-day average will be support. You didn't hit the 18-day average. You had 54.09, but you certainly hit that upper Bollinger Band, and if you got out there in a trading pattern, basically, that's going sideways, you had a great day. This is not a trending pattern, my friends. This is all sideways action right now. The Russell threw out a sell signal today. Why? Lower highs, lower lows. Now, you don't have the 18-day under the 100, which if you get that, that could be an even bigger signal. But you do have the pattern of lower highs, lower lows, prices under the 18-day average, and momentum pointing down. Until today's highs are taken out, I would expect formidable resistance, 1362 to 66, and for the bears to try to defend against getting over today's highs. Get over today's high tomorrow or Friday, and then you got a nothing picture, just wildness in the market. In the VIX, the market today, here's where you finished last night. If it drops, I wouldn't be surprised if you make a run for the lower Bollinger Band, but you haven't been able to stay under or over a band in a long time. The market drops today, gets within 13 points of the Bollinger Band, turns around, comes right on through the 18 and the 100-day average of closes. Wouldn't be surprised tomorrow if it makes a run at the upper band. But so far, there's no follow-through. Eventually, this is either going to be a massive top, all this sideways action, or a base that it goes higher on. And with it, so goes the stock market. I don't know which one of the two. In the bond market, they tried to break the market today, couldn't do anything. More important, the embedded reading stayed in place. It was not in place this morning. It had lost it, and it had lost it in the 10-year notes the same way, and this is still in a bull trend with a crossover where the 18-day got over the 100. I am expecting to see a new high on this leg up, which means the upper Bollinger Band, as far as I'm concerned, looks like it's in play for a resistance point. Dollar index got ugly today, got up to the 100-day average and just let go. Now, it missed it by 2 points. Okay, but that's pretty close, right? It's overbought. It's not turned itself one way or the other. It doesn't have a trend. It's got a lower low and a higher high. It certainly has upside bias because it's over the 18-day average, but it's also got a very clear resistance point at the 100-day up to the upper Bollinger Band, and that's where it looks to me like the resistance is. And it's the flip-flop in the euro. They are just mirrors of each other. You went from the high here down to the 100-day average. You've been hovering at it in an oversold condition, and all of a sudden you tried to lift over today. Couldn't do it, but you're hugging that number. So we know where at least the market's trying to make a play. And look at the British pound, how it held the combination past couple of days of the 100-day average, the 18, and it's trying to stay okay. But what does okay mean? Here's what it means to me. Lower highs, higher lows. You're narrowing in, and momentum is saying don't get bullish. Momentum, if you buy the theory that momentum leads price, if this market gets under 124.41, then price and momentum would come together to the downside, and that could be the bear signal in the market. From where you're at right now, who knows if that'll happen or not, but I'm just giving you the trade ideas. Japanese yen remains in the bull camp. Now, it was giving up a lot more ground than this today. I think part of the ugliness was North Korea firing another missile, questions about trade, there's all kinds of things, but nobody paid attention to North Korea's missile right in front of Premier Xi coming in to talk about North Korea and the U.S., and at the same time, the Trump administration saying the clock has run out. I was amazed. I don't think that gold got a bounce for 30 seconds. It just was laying dead all day long. When you get to the crude oil, you hit the upper Bollinger Band the past 4 days. It's acting as resistance, overbought, the trend is up, but that is the problem the market is fighting. The same in the gasoline. It keeps hitting day after day, that upper Bollinger Band, but today it did something even better. It got up to the 100-day average and wham, that was enough for it. Is it enough to stop an overall bull trend? Doesn't have to be. It's just telling you where the early resistance is. The market is overbought. And in the nat gas, you're getting a little bit of a reversal. I was shocked yesterday, and I mentioned that, how much it went up. It even had some follow-through today. The market suddenly decided to focus on warmer weather. Let me give you an idea of that focus. We're going to have snow in Chicago tomorrow. We're outside right now 40 degrees. So it's wild. What's happening on the West Coast is not happening right here. Here's something happening for you. If you haven't taken advantage of my charting course, we're not talking thousands of dollars. We're not talking $1,000. I used to sell earlier versions, and it was not of the same course, courses that I had created years ago for $500. Just this past December, I released a brand new course that I started making in June and July, brand new from top to bottom. And in it, I used new technology so I could get that price down and keep it down. Now, I took this course out at $69.95 in December. It's now up to $89.95, and here's my one guaranteed trade. It's going higher. Who knows? I do. I priced the course. But I am offering all of this with a $15 discount by just using the word Ira 15. You're going to get 54 video chapters. Charting software, $99 value by itself. You're going to get access to my market research, a $60 value for 30-day access to that, and the course itself, all for $74.95, not the $89.95, as long as you type in Ira 15. Why not invest in yourself? Take a look. It's not, what is it? It's a penny and a half in a corn trade. It's not even $1 in a full gold. Take a look at the course. I'm Ira Epstein. You have a good day.